All right, let's look at the market. Let's do some trading with Alan Nuttman, joining us, Chief Market Strategist at BullseyeOption.com, taking a look at Nike after a rally last week. But I know you're going to want to set the tone for this week on a Monday, Alan. So bull us up, baby.
How can I not? How can I not? Now, your previous guest.
Oh, God. Here we go. Don't do it, Alan. Don't do it. Don't wade into the, the lion's den.
So someone was concerned that the market had its best week of the year. That's not concerning.
I didn't hear that. Who's concerned we had the best week of the year? We're above the August high.
Specific words. I'm concerned that the markets have had a big rally. I'm not naming names. I'm just saying. But anyways, it's either half full or half empty. But the key is, I think that we want to focus on the best part of all of this in the last couple of weeks is the dollar decline. We're at 6-month lows in the dollar. The dollar, if it breaks at 100, it's off to the races.
I knew you were coming for that dollar.
110 was in the euro currency. Yes, yes, and yes. That is the next catalyst for stocks. We're at the end of earnings season. Earnings season was fantastic. Revenue growth was great and margins were great. Those are important. And they're expecting earnings growth of double digits in the next couple of quarters as well. So the markets are very positive looking forward. And you talked about the fact that we bounced back. We got about 52.40, which was the halfway point in the S&P, E-mini S&P anyways. And when it does that, it gets a full V recovery. That targets 6,300 in the S&P.
There we go. All right. So the full month recovery for August that we're at right now, basically at it. 55.66 is the high for the S&P first day of August. So, all right, we made that big V recovery. So you're thinking we're basically in the clear now that we've done that 180?
Well, what's concerning me, and actually I don't very often
Wait
talk
a second.
about concerns.
What?
The concern is that we did not have a secondary shakeout. It was a flash, it was a flush out, which needed to be done, obviously. But if you look at things technically, everything held at the 200-day moving average, which was very important. The NASDAQ hadn't been below its 200-day moving average in more than a year. The S&P hadn't been down to its 200-day moving average since November. So that held as a super support level. Now we've popped above the 50-day moving average in everything as well. So everything looks very, very much positive. But at some point, there could be a secondary profit taking. And again, I've talked about how important it is, not that the profit taking happens, but how the market reacts after that. So there is some caution in the fact that the markets have come back very, 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 very fast. And if you didn't take a swing at it when you had a chance, looks like you missed out again, just like you did in April.
Okay. So the main message here is technically the rebound generally points toward a breakout towards the 6,300. Get the point on kind of, where maybe there's some imperfections to some of the logic, but when it comes back down, the market logic that you're arguing, that may not be perfect.
Yeah, it is imperfect. I follow the charts, and the charts have been very much positive. We're in a bull market, and if you don't use the risk reward to your advantage when you have the opportunities, that's when you've gotta load up. You can't be thinking about what's happening. Now there may be,
I got you.
And there will be some pullbacks, here in the future. You've got to use that to your advantage. And if it doesn't rebound from those pullbacks, at least you got in at a discount as opposed to chasing it after we've just had a 500-point rally in the S&P.
No, fair enough. I totally get your logic. The market there's a little tension within the market. Right. The main point too, just to come back before we get into your Nike trade, you think generally dollar down, still something you want to root for as a stock bull?
Oh, absolutely. Absolutely. So, and there are forces at play. We always know, I don't get into the outside forces, but most people will agree that investors want the dollar to go down because that is helpful for all assets that are priced in dollars.
Fair enough. Okay. Hey, let's trade some Nike. Alan, taking a little stab at a comeback story here.
Yeah, I'm an Adidas guy. I'll tell you that right off the bat. Okay. But Nike, we've talked about sales. Now, the market was on sale. The S&P was down 10%, and we had the NASDAQ down 20%. The NASDAQ's come almost all the way back. It's only down 5% now. And the S&P is only down, 2% off its all-time top. So you've got to look at sales and take advantage of. This stock is 50% off 50% off its 2021 high. So from a risk reward standpoint, and the technical pattern on this bottom has been very significant. When you traded between 70 and 80 for a number of weeks, made a bottom base, bullish divergence, made new lows, but not new highs in implied volatility. And we've broken back out above the 80 level. So we're seeing a breakout again. That breakout targets 90. And if you look at it, it's been a stair step down, goes sideways, down, sideways, down, sideways, down. But this bullish divergence is how you break that downward pattern. And like I said, this is a stock that's been straight down. We were at 120 in December. So the midpoint of just what you see from this year is 95. That's not even counting that all-time high.
Okay. So looking for, this to basically recover. And then you could kind of decide if you want to, get out or hang on to more. But it seems like as long as it recovers, that's a pretty good trade on its own. You don't need this whole all-time high. That'd be nice. Right. But even just to go back to the gap.
It's a Dow stock. The Dow is very close to its all-time highs. This stock is not. Nike's got a modest PE of 20. And what's also important is the market right now is got a PE of about 20. So it still hasn't gotten to that 22, 23 all-time high that we saw a couple of years ago. So we're still at a discount as far as valuation goes. I'm looking at the November 75 call. It's about, $9 in the money. It's trading for 10 or 11. So it's a deep in the money option. And it's going to act like the stock. Again, the low on this stock is 70, and that's multi-year lows. Have the right to be long from 75. And there's a gap that it's working to fill right now. So if it works to fill that gap, then it should get to the 95 level. And a move from here from 83 to 95, that's a 10% move. This option will gain 100%. And that's what this is about. It's about risk reward. It's about having limited risk, number one, on an in-the-money option. You can sleep well at night. And you're seeing money flow into this stock at these levels. So they're accumulating long positions. That's an indicator that I follow very closely. That's what I use to make my decisions, is I follow the money. And we also have that bullish divergence. So there's a lot of positives that now is the time to get back into Nike.
All right. Okay. Like it. The bullish market take, the bullish Nike take. Good stuff. Thank you very much, Mr. Alan Uckman.
Thank you.
All right. Always a good dot there on market. And a little trade into the bullish comeback for Nike. Chief Market Strategist at Bullseye Options.